With me right now is Dr. Robert Schiller, one of the top minds in the field of economics. Really one of the top-notch people that you'd want to hear from here in Davos. He's speaking on many sessions, and he's been kind enough to grant us some time. He's also written the famous book Irrational Exuberance, of which I was just told the third edition is coming out now, very soon. Dr. Schiller, thanks very much for your time. Great to have you here.
My pleasure.
I won't ask you to describe what is in the book, the third edition, but it's a great cue for me. Is there a lot of irrational exuberance now, once again, around the world?
It varies around the world.
Let's start with the U.S., for example.
The U.S., the stock market is at quite high levels, not record high. My CAPE price-earnings ratio is at 26, which is tied with where it was 7 years ago in 2007.
At the peak of the last bull market.
At the peak of that market, yeah.
Okay, that doesn't sound right. I mean,
it doesn't
at
sound
least
good.
Sound good, yeah. I mean,
but I don't know that you can't really forecast peaks accurately.
Yes. But your CAPE ratio has been widely quoted as being one of the most reliable indicators. I mean, you've backtested it as well, right?
Back to 1881.
Yes. So.
And it explains about 25% of the 10-year variation in stock returns.
Right.
So it's not fantastic, but it's especially when it's at extremes, it becomes more useful.
So you'd say we are at an extreme now? I mean, at least going by the indicator.
It's 26 now in the year 2000 at the peak, the real peak. It was 46. So it's been much higher. That's when I wrote the first edition of Irrational Exuberance. I thought, this is a chance of a lifetime to predict a market correction. And I was really lucky with timing. I got it out right at the peak.
Yes.
That peak.
Yes.
So I'm not, I'm concerned. I think there are other countries you can invest in.
Yes.
I hate, this sounds unpatriotic. No, Europe is generally...
But do you think, sticking with the U.S., I'll come to Europe in just a bit, but do you think in the U.S. we could be at the cusp of a big correction? We can't see how that will happen because the consensus is now so bullish. U.S. is...
Yeah, but that's the way it's always been.
It's always been, yes. So
I look back at 1929,
yes,
the most famous stock market crash.
Yes.
Things look pretty good. And if you just read newspapers from back then, it's hard to find any... there were a few doomsayers, but it's hard to find... read the newspapers from 1929, which you can do on the web now anytime you want.
Yes. And what they said about the time then.
President Hoover, after the crash, said, there's nothing wrong. And so he kind of predicted it would be right back up.
So it's tough to call, but you'd say this is...
It looks pricey.
Yeah.
The one problem is that bond markets are pricey as well.
Yes.
So the main asset categories, there's no slam dunk. I'm not urging people to switch from stocks to bonds because they're both looking pricey. Very
pricey. What could go wrong with the U.S.? I mean, as you see it, your indicator is telling you that stocks are pricey. But usually you need some sort of a trigger which acts as a catalyst for the start of the fall. What can go wrong?
I call them precipitating factors.
Yes.
But they can be very minor. Just something that attracts people's attention. But then the decline, it tends to come after... one thing, I have a stock market confidence index, which you can find on my website, called valuation confidence. And it shows that right now, especially among individual investors, there is loss of confidence in the valuation of the U.S. stock market.
Okay.
That means they think it's overpriced, but they're hanging in there. This is a sign of bubbly behavior.
Yes.
So there could be something that it could be a combination of factors.
But you're saying it doesn't necessarily have to be, something very big. It can be a very small thing, and then it can sort of start...
Then it's a feedback loop down.
Yes.
Once, what typically happens, there'll be a few big down days, and then they'll be talked about, and it will bring up some theory about why they were down, and then people mull that over with, and then 3 months later, there's an even bigger one. So and it can... This is what's happened in history. I'm not saying this is going to happen in 2015.
Absolutely. What about Europe?
Well, Europe, the stock markets are generally way lower priced. It looks like not much more than half the price of a U.S. market. So It's a better investment. Now, again,
so you'd buy European stocks. I mean,
see, the thing is, this is classic.
Yeah.
You can say, well, Europe has all these problems, and now the deflation is appearing, and deflation could be a sign of protracted depression. We just came out with this QE announcement, quantitative easing.
Yes.
Some people think that's a sign of desperation. On the other hand, that could be the time to buy. I'm not saying to make some plunge into Europe, but
people are also saying that maybe it's too late in the game. They should have done this much earlier. I mean, US did it, Bank of England did it.
Yeah.
Maybe the ECB should have done it much earlier.
I think they should have done it much earlier.
Yeah.
But it should still have impact.
Yes.
I don't think that it's necessarily a solution, but
Okay.
it has an impact.
So what kind of impact? You think it will lift asset prices?
In 2012, the Fed announced that it would be doing quantitative easing, called QE3.
Right.
And they would buy $85 billion a month, $45 billion of long-term government bonds and $40 billion of mortgage securities. So they were putting $40 billion a month into the housing market. And, of course, that improved up. And what it did is it brought mortgage rates down to an all-time record low later that year. And I think that people notice that. If you tell even an uneducated person who doesn't follow this, mortgage rates have never been lower in the whole history of the United States. Right. What do you think? Are they going to go down from here or go up? You know, it's probably a better bet that they're going to go up. Right. So this is just ordinary common sense thinking. This is the time to buy a house. And it launched an upward movement, a strong upward movement in home prices. Right. And it also launched a stronger economy. So I think it worked especially well because it created these record low.
But the question in the U.S. though is it sustainable? I mean, I guess you have views about home prices as well, right? I mean, they're back to being at I mean, and I read somewhere you said they're also at very high levels now, almost.
Well, they're not at they've gone up a lot. Yes. They're not at very high. Most cities in the U.S. not at very high levels compared with 2006, but. They've gone up over 30% since 2012. So that's a pretty rapid pace of increase.
So I mean, here in Europe, it's $70 billion a month of sort of debt purchases by the ECB. It's not as easy. I mean, one bond market in the U.S. It's many countries, and but
I don't think that the effect of quantitative easing is very predictable.
Okay,
we're talking about speculative markets, and this is in my book, that the people's reaction to actions depend on their narrative at the time. And part of what's happening in the U.S., as in other countries, is that there hasn't been a lot of bad news lately. The memories of the recession are fading, and people are spending more. They think, well, I've got to get a new car eventually. I've held off for a long time. So that kind of thing is bringing things back. And it's perfectly normal that there would be a recovery, even if the Fed did nothing. Normally, even back before we had the Fed, before 1914, these things tended to pass.
Do you think we'll see deflation eventually in Europe, or we
already see deflation in Europe, but the question is whether it will get bad. I'm thinking probably not.
So you're saying Europe is in deflation? I mean,
it has been recently. There have been declines in prices.
It's entrenched.
Well, the question is whether it's entrenched or whether it's a blip, and that's something we just have to wait and see. But I think that the European Central Bank will. They're taking this strong action with the quantitative easing, and it will probably work, and there won't be deflation.
And they'll do more if necessary. I mean, they'll. I mean, if they're going down this road, then might as well.
Mario Draghi, the head of the ECB, once said, "We'll do what it takes." And I think that he still has that tone into his talk.
What about China? What's your sense there? I mean, stock market's done very well after the rates were cut.
Yeah, it's amazing. I was telling people, the stock market in China looks like an opportunity. But I'm so busy going around talking, I didn't actually put my money into the Chinese.
Well, it was a late takeoff, right, after the central bank cut rates. I mean, in a week, I think the stock market was up some 15%, 18%.
But it might be too late, so I don't know.
Okay. But are you sort of positive about the prospects of the economy? I mean, 7.5% growth rate. I mean,
I've always been not always. Ever since Deng Xiaoping, I've been positive about China.
Okay.
But yeah, it's not going to do as well as it has in the past. Okay. Partly because they're more realistic now. They're concerned about the environment, and it's going to be slower, but it's going to be good. So.
But they've also changed track. I mean, they were sort of trying to manage a slowdown effect. I mean, essentially, sort of hike interest rates, control the property sector, etc. Now they're loosening up once again after seeing the effects of that. Maybe they thought it was too much. You think that's the right thing to do? Stimulate growth once again a little bit?
Well, what I think particularly comes to mind is their shadow banking system in China, which had been growing by leaps and bounds, and it was causing credit to be given lavishly to home buyers and others. And this is something that the People's Bank of China has and others have started to be concerned about, and they've reined it in. So that's probably something necessary to keep the economy growing on an even keel and not to get too speculative. So I think that the Chinese government has been doing okay in dealing with a tendency economy. I think the Chinese economy seems a little bit more prone to speculative excesses. Okay. Maybe because they're a younger economy, because their economy is more stacked to the future. It's more built on what will things be like. And
yes. What about India? Any specific thoughts? I mean, a lot of optimism back home here in Davos about India as well this year.
Well, I think that Modi is a can-do person, and I think I don't see clouds on the horizon.
Oil prices coming down are a big boon, big net.
That's now, yeah, for India it's good. Not so good for Russia.
Yes.
And that I feel sorry for the Russians actually.
But back in India as well, there's a big debate about the focus on the fiscal deficit, austerity, right? Yeah. And the need for the government to actually start spending, because the cycle which is broken needs to sort of start, and you need some demonstration effect, and the government has to show that. Would you agree with that?
Well, I've been supporting fiscal stimulus generally, although we've seen countries that didn't stimulate, like UK, have done all right anyway. This isn't hard science. So a lot of countries, maybe they need some kind of structural reform more than they need fiscal stimulus, or maybe they need both. I think maybe India is in that category. They need both.
When do we see the new book, the third edition of Irrational Exuberance?
It's up on websites like Amazon already.
Okay, so we'll go grab a copy.
I have a copy. I don't have it to give you. I would if I had it.
Thanks very much, Dr. Schiller. Thanks for your time. Appreciate it as always. Thank you.
My pleasure.